Let's try and get some perspective from domestic voices out here as to how they see the local cues and what's in store over the next couple of days. Mayuresh Joshi of Angel Broking joining in to discuss the fundamentals, and Jay Thakkar of Sharekhan joining in to decode technical trends. Gentlemen, afternoon. Thanks so much for taking the time out today, but it's been a pretty horrendous afternoon as far as markets are concerned. Once again, we've been reeling under pressure. Mayuresh, what are you advising clients to do? Are we seeing more weakness? Because you probably thought the August lows would sustain of that 7667, but that's gotten taken out today as well. So what do you make of the markets right now and the outlook from?
Afternoon, Priyank. Clearly, I think the volatility will continue to the markets, and the nervousness and fear that we're seeing across markets would continue for some length of time, because nobody's really sure on what kind of data points China will throw out. The job number that the US market will come out today, I think that is a keenly watched out number. But to a large extent, I think the markets are factoring in that the Fed will take a very conscious decision, and I think the Fed hike would start after December. So that might have some amount of soothing nerve sort of an effect for the market from an immediate short-term perspective. What RBI also does should be keenly watched in its monetary policy meeting later this month. So clearly, I think there are a lot of data points to be worked out with, and even on the macro scale, I think if you looked at the core numbers, the IP numbers expected to be weak, but the kind of government spending that has come through in the first few months, I think that definitely suggests that the second half should see some amount of incremental order flows coming through for a lot of the infrastructure power road related sectors. Having said that, probably I think we might correct 4 to 5% from the current levels looking at the global scenario, but clearly I think such corrections would warrant small accumulations to be initiated, because you're really not sure when the bottom of the market is made. So clearly I think qualitative stocks where price erosion has been quite substantial over the last few days and weeks, I think we present that to be a very good buying opportunity, or at least an accumulate opportunity, and a small portion of your corpus should actually start coming into the markets on any further fall that you see.
Jay, what do you make of the technicals out here? I was asking Mayuresh the same thing in regard to the way the August close got taken out. Your thoughts when we talk about levels to focus on here? Do you foresee more downside? And what kind of strategy are you advising clients to implement right now?
Hi, good afternoon, Priyank.
Afternoon.
Basically, Priyank, see, let me first clarify that this is a correction which we are seeing in the ongoing bull market, right? So this is just a medium-term trend down and not the long-term reversal from up to down. I'm very sure about that because the impulse wave which we have seen from the levels of 6,300 until 9,100, that clearly indicates that we're not going to go below 6,300 from where we had seen the breakout. Now, the short-term targets have already been met. We had a target of around 7,700 and on Nifty, and approximately 16,100 on the Bank Nifty. Now, with this, today's breakdown, what we are seeing is the extension in the down wave, and this extension can go till the levels of 75.40. That would be the first target on Nifty, and below that we have various other levels like 74.20 and 7,200 levels. So these are the levels what we can see going forward in this extended wave. In the Bank Nifty, we had a target of 16,100 as I said, but since those levels also got broken today, I think on the downside we can see the levels of 15,250, 15,200 levels. That's the max is what I think, in both of these indices we should see. I'm not looking beyond those levels as of now, because I think this is a final leg. I remember that last time when I discussed, I said that the pullback is done and we might see one more leg on the way down. We did see, but now we are seeing the extension in that wave. So whenever this wave, the final leg gets over, Priyanka, I think the market should bottom out. So that's the final leg. I think one has to be very cautious, because in this final leg the volatility will be definitely too high, and we will see a lot of stock specific action. Now I think, Priyanka, those stocks final leg, the volatility went down till now, will start falling and will drag the Nifty lower.
All right, gentlemen, hold that thought. In fact, we've been focusing on the way global cues have been panning out. Let's get another perspective here. China needs to do more to manage its stock market volatility. That's the word from Nouriel Roubini, the co-founder and chairman of Roubini Global Economics, believes the Chinese slowdown will be a hard landing. Here's a slice of that exclusive conversation.
Well, China is in an economic slowdown, but I think that the markets have gone from extreme optimism about China a few months ago, soft landing, to now the view of a real hard landing, that the economy is in free fall. My view has been all along that the Chinese slowdown is going to be a bumpy or rough landing, but something short of a real hard landing. So I think that markets are now becoming slightly too pessimistic about Chinese economic growth and the ability of the policy authority to manage that growth slowdown and also manage the movements of the currency and of the stock market.
So do they need to do any more?
Certainly there'll be more policy actions from China. They need to do more to try to stabilize the economy, and they have to be more consistent in their economic policy. I think there is a movement right now away from managing key asset prices like the stock market, the currency, and interest rates to letting them more be market determined, but that's creating short-term pain in favor of long-term, more market determination of those asset prices. It is something in the medium long term that is positive.
Muriel, when it comes to financial assets, and if you had a bit of money to invest right now, what would you be buying and what would you be selling?
Well, I believe that the volatility coming from China and the slowdown in emerging markets, the uncertainty implies for US, Europe, Japan advanced economy is going to stay with us for the next few months until there'll be stabilization of the growth rate in China and more credibility of their policies. That implies that probably this risk-off episode can continue for a while, and therefore you might want to be slightly underweight risky assets like US and global equity for the time being and go more into long-term government bonds that are going to see some higher returns, and stay away also from emerging market assets and stay away from, for example, their currencies. So stay away from risky assets into the stuff that is more safer for the time being, as this volatility is going to continue for a while.
So if we are risk off for a while, if we are volatile for a while, where does that leave the decision-making process for the Federal Reserve? Will we see a hike in interest rates in September or December, or not until next year?
Well, I do believe that the Fed is not going to hike interest rates in September, but there'll be a rate hike in December. I don't think they're going to wait until next year. Why they're going to postpone beyond September? Because of three factors. One is global market volatility and uncertainty about global economic growth. This is creating a fan of uncertainty. There is one option value of waiting. Secondly, there'll be, through the direct trade channels from China and indirectly the impact of China on growth in emerging markets, in advanced economies, an impact on U.S. economic growth, and the tightening of financial conditions in the U.S. will also slow down somehow economic growth in the United States, create more slack in the labor market, soften wage growth. And third, you have now a slowdown of inflation in the United States because you have a fall in oil, energy, commodity prices, a rise in the U.S. dollar, and that slack in the economy is going to create a further slowdown in wage growth. So inflation is low, it's going to stay low for a while, and therefore, what's the rush of hiking rates? On the other side, the U.S. economy domestically is doing quite well. There is job creation. Many sectors of the economy are growing, and therefore waiting beyond September probably, beyond December probably would not be warranted. So the Fed is not going to hike in September. Most likely is going to hike in December.
All right, Nola Rubini, in conversation with my colleagues earlier in the day out there, again sounding a little concerned in terms of the way the global environment has been panning out. But Mayuresh, let's talk about what's been happening back home here as well in terms of the way some of these sectors have been panning out. The banking pack continues to feel the pain of this entire broad-based sell-offs that we've been seeing across the equity markets on a global level as well. But specifically, what's your reading when we talk about the banking pack? Are you nibbling into anything out here? Are you advising clients to probably start looking at some of the banks considering the kind of fall that we've seen?
Well, yes, I think the fall in the banking stocks has been very concerning, Priyank, and again on the private side as well, where surprisingly the numbers have been exceptionally good. Asset quality has held up. We are still expecting earnings growth to exceed 20-25% for most of the top tier names in the private banking space. The fall has been extremely intriguing. So clearly, I think chipping in at small intervals when you're seeing these falls is probably guaranteed at this point of time. But our own take is that the earnings trajectory should be quite strong over the next couple of years. Structurally, I think the banks are in much better shape when you speak about asset quality, capital adequacy, their CASA ratios, and that will probably hold them in good stead. So clearly, I think the fall has taken a lot of sheen out of private banking stocks. But yes, I think the fall also gives an opportunity for long-term investors to at least start chipping in a small bit on the top top-tier names, Axis, Yes, ICICI. I'm not ruling out that 10-15% correction if the markets fall further is not there in these stocks. But again, I think further corrections would warrant further accumulations happening, because I think the quality within these stocks still remain over the next couple of years.
All right, so that's as far as the banking pack is concerned. Jay, any levels, anything on the bank nifty or individual names that you would watch out for?
Sure, Priyank. Basically on Bank Nifty, as I said, now on the upside, 16,613 will be a very crucial resistance going forward. I think till those levels are not taken off, we will not see any reversal in the short term at least. On the downside, 15,750, that's the initial support, and once that gets broken, I think next level will be 15,250. I am not seeing Bank Nifty going beyond 15,250 levels, so that should be the I think the medium term bottom. That is the max level which we can see. That is more around 700 to 800 points on the downside. Stock specific, I think one stock, ICICI Bank, has broken a clear bearish head and shoulders pattern. I think this stock is still heading around 7 to 8% on the lower side. Yes Bank, I think this stock is heading towards the levels of 600, 590. This stock has completed its wave 4 on the upside. I think around 679 is a very crucial resistance going forward. So I think still 679 is not taken off. This stock has a fair chance to retest its low of.
All right, seems we just got lost the video connection there with Jay. We'll just try and reconnect with him. But Mayuresh, we were talking about the banking pack. Beyond that, when we talk about some of the other space of this market that have been in focus as well, you see only some bit of pockets that are actually holding on today. BPCL, Bharti and Coal India are only a handful of the stocks that are actually in green. We had that earlier, Cipla, which is one of the top gainers, but even towards the end, it's not managed to hold out and it's actually in negative right now. But what do you make of that acquisition that Cipla announced earlier this morning of almost $550 million in US of those two companies?
So clearly, I think our first cut analysis suggests that the acquisition is a tad bit expensive. Yes, I think it gives entry for Cipla into the US markets, which only account for 8 to 9% of its total sales, and US generic market being one of the largest in the world. Cipla probably has entered these markets a tad bit late. However, I think the opportunities are quite significant for Cipla, specifically in the CFC inhaler market, which itself presents a $3 billion kind of an opportunity. The ophthalmic market in the US inhaler division, I think that also holds up pretty well for Cipla. I think the ANDA pipeline also appears to be quite strong. So I think the approvals coming through over the next 2 to 3 years, I think that should hold Cipla in good stead over that time horizon. But clearly, I think the acquisition, in our opinion, would have lesser margins than one really expects. Even the Medpro acquisition, I think Cipla is just about coming in sync with what it had acquired in the African subcontinent. So clearly, I think valuations say a tad bit on the higher side. The acquisitions coming in from internal accruals, that will have some amount of impact as far as cash flows are concerned for the company going forward. And 3, I think one really needs to understand how the approvals will come through, both for the acquired company and its standalone business as well. So I think all these 3 factors should help Cipla over a structural longer time period, but from a short-term perspective of 12 months, we still believe that Aurobindo Pharma is where the value is. A strong ANDA pipeline again, 18 injectables expected to get approval in the next couple of years. The acquisition of Actavis and Natrol has actually helped him becoming a $2 billion company in terms of top line, and an 80% company in terms of population as a breakup of its top line. So clearly, I think valuation supportive for Aurobindo. The approvals which have come through over the past few weeks are also supportive in terms of how the earnings will pan out. So I think we remain positive on Aurobindo at this point of time. We'll probably wait for declines on Cipla before we take a call.
Mayuresh, I've got less than 30 seconds to go for the markets to actually wrap up for trade today. I want to get a quick comment from you going in terms of topics, if anything, from the mid-cap space.
So I think we're still sticking out with our themes, Priyank. So Bajaj Electrical from the consumer space is something we like. Turnaround in the E&P division. Inox Wind, where I think the focus has been quite significant from the government side. They're increasing their capex. The earnings growth should be quite stupendous over the next couple of years. So I think the few stocks that we are liking from the mid-cap universe, and even something like a Treehouse Education, where we believe I think has no relation with what is happening across the globe. They are adding preschools. The earnings has been quite significant. It's an asset-light model. They're increasing their presence through rental property. The QIP ratio should increase the earnings prospect, at the same time reducing interest payments. So I think a few of these stocks that we continue to like within the mid-cap universe.
All right, fair enough, gentlemen. Hold that thought. Let's just get the closing codes going for you as well as far as the benchmarks are concerned and how that's really panning out right now in terms of what we're seeing. It's been clearly another tough day in terms of the way the markets have been panning out. Sharp cuts on both the benchmark indices. Let's just get that going for you. 2% and over as far as the Nifty is concerned. Sensex also down by a whopping 560 points is what we're seeing today. It's been another tough session, and the pain has been revolving around the way the banking space has been panning out, and the Bank Nifty once again being a major concern. Just get the Bank Nifty going for you as well. That one slated to close lower, and by quite a bit is what we're seeing. 2.5% knock when we talk about this space. Beyond the banking names, Vedanta, GAIL, Tata Power, Tata Steel, Hindalco, NMDC all seeing sharp cuts today. Ambuja, DRL, you had Sun Pharma, Ultratech all collapse in terms of trade today. The only green spots were BPCL, Coal India, Bharti and Lupin that just managed to squeeze out some bit of gains. The broader markets also no better picture there as well. You've got both the mid cap and the small cap close quite in negative is what we're seeing in terms of the way the benchmark, the broader markets have also been panning out today. All of them seeing quite a bit of a cut is what we've noticed today. So there's been just all across the space. Quick mention on some of the big volume losers. HTIL, Suzlon, Jaiprakash Associates, Unitech all seeing cuts. Amtech Auto was another fairly volatile counter. Surprisingly, it's managed to close in green is what we're seeing. But that stock's been influenced by a whole host of other factors. It may be in the terms of the way block deals have been panning out over the last couple of days, the kind of institutions selling that we've been seeing in that counter as well. PNB, Hindalco and Axis Bank again were some of the stocks that actually lost out. Indiabulls Real Estate, another tough session is what we noticed. DLF seeing a little bit of a crack as well today. You saw Union Bank of India lose out. Adani Power was another weak one is what we noticed in terms of some of the stocks and the way they've been panning out. NCC 12% lower is what we saw on that stock. Massive cut coming in. GVK Power again losing out is what we saw. Dishman Pharma having another tough move is what we saw on that stock, but it's been a little bit of an outperformer, so some cool off coming in on that counter. Beyond that, you had some of the other names that were in focus from the mid-cap space, like Adani Enterprise, Subex and Canara Bank also losing out. I was talking to Mayuresh about his top picks. Jay, anything on your radar?
Reversal in the short term, from down to up. We would not go on the long side. Definitely on the short side, we have recommended few shorts to our clients. One of them is Yes Bank, which I just discussed with you. Second would be on Ajanta Pharma. I think this stock is expected to head lower towards this previous swing low. So I think we can see the levels of 1300 to 1250 on Ajanta Pharma. One can place a stop loss of around 1530 on the same. And Bajaj Auto, which has given a breakdown from a triangular pattern in today's trading session. So I think this stock is heading towards the levels of 2100 levels. And on the upside, we can see the resistance coming around 2260. So in both of these stocks as well, we have a good risk reward on the short side. Nothing long as of now.
All right, so no longs, only looking at probably shorting a couple of these names is what we're seeing. Jay, as we just wind down our conversation out here, want to get a quick technical check going on a stock that I was discussing with Mayuresh out here as well. It was Cipla. Stock's been in the news today on the back of that acquisition. What's your outlook for that one? Jay, if you can hear me, outlook on Cipla?
Priyank, I think Cipla is trading within a range. Sure, Priyank. Cipla is trading within a range of 600 to 750 on the upside, Priyank. I think it would continue to trade within this range. This stock has gone into the wave 4 consolidation. Generally, after an uptrend, we see these kind of consolidations in the wave 4 happening. I think it will still consolidate for more 1.5 months within this band. So I think it's still between this range of 750 to 600 levels. Whenever it comes near 600, I think it will be a good buying opportunity. And once it comes near the levels of 750, 760, or I think it will be again one should exit from the longs. Till it doesn't give a meaningful breakout from this range on the upside, I think one should continue to trade within this range. So it's going to be a good time for the traders buying at the lower end of the range and selling at the higher end of the range, and not for the investors. They might just have to wait for 1 or 2 months for this stock to really perform and give a breakout on the upside.
Yes, that's as far as Cipla is concerned, is what we've been tracking out here. But, as we count down to some global events out here, Mayuresh, what do you believe is going to be the strategy for investors, at least in the immediate term?
So clearly, I think let the market settle down, Priyank. I think there is a lot of uncertainty in the markets, as we've been mentioning, a lot of data points moving to and fro. And again, I think what really happens is an event risk that the markets is going to encounter. So again, I think, as I said, for long-term investors having a view of more than 2 years, such dips become good accumulative opportunities. Look at qualitative stocks which have corrected. We've already discussed a few of the sectors that we like. So I think qualitative stocks can be accumulated. I'm not ruling out, as I said earlier, a 4-5% correction into the markets. But again, I think any substantial fall into the markets going forward will become good buying opportunities, because the stocks will become much more cheaper. Your impact cost will also keep on going down if you accumulate stocks in regular time intervals and on sharp declines.
All right, gentlemen, we leave it there. Thanks so much for taking the time out today to talking to us and getting us your perspective on markets and some strategies going forward from here. All right, sorry for that. Now, nothing matters more than the US